Minasan, konnichiwa, Zamurai Engineer desu. In this chapter 1, we are going to continue with module number 1, Tier 1. Under the chapter topic, Managerial Accounting and Cost Concept. So, important concept, cost concept, and accounting concept here in module 1. Let us take a look what is the most important one. In this module, we have our learning goal to identify the major differences and similarities between financial and managerial accounting. Okay. So we already reviewed the financial accounting side for more than 3 weeks. Okay? And you would like to now differentiate, because we will use those concepts that we reviewed from financial accounting, but we also would like to differentiate. What is the difference between the two? Let us compare at each of the 7 aspects. First aspect, we will compare between two from the point of view of user. Financial accounting users are external persons who make financial decisions. So like what? Bank that would like to decide whether they will give us a loan or not. And potential stockholders that who will decide, they will decide whether they would like to what? To put their capital on our company. So those are external person, external to the company. How about managerial accounting? The users of the information that we will report, okay, that we will report are managers who plan for the control of the organization. So that's why we initially took the topic of management. Management: plan, direct, motivate, and control. So those persons who would lead the organization and make those types of decisions are commonly called managers. And those managers are inside the company. So they are internal persons to the company. The next aspect that we would like to compare is time focus. Okay. With respect to time period, historical perspective is the one generally observed in financial accounting, meaning if you buy a house and lot 20 years ago, that is the value of the house and lot up to now. It will change the value if you what? If you sell it and buy another one. So meaning historical, although we would assume that the value 20 years ago is very low compared to right now, that is the historical value of the property with respect to time, historical perspective. What about in managerial accounting? Rather than base the amount, the value of the property 20 years ago, where we purchased that property, we are actually value the property as if we are buying it right now. What is the current value? That is the future interest. Actually, when we say future, it's not right. It's not the market value right now, but even the potential. Managers are even looking for actually 5 to 10 years or even more. What is the value of this property 10 years from now? That is futuristic valuation of property. Meaning to say, if the value of property 10 years from now is 2 million, you will not sell it the amount of money if you compute the the interest 2 million 10 years from now, compute the interest going back to now. So you can compute that in financial accounting. You can compute that. No? That is the present value. So you can compute the present value given the future value. So it means that the property right now is, for example, if you computed, for example, the result is 1.3 million. So meaning to say, if somebody offers to buy the property for 1 million, obviously your company would deny because of managerial decision with specific computation. But you can compare that the value, present value should be 1.3, not 1 million. So therefore you will deny or reject the offer to buy. The third aspect is verifiability versus relevance. Financial accounting emphasizes verifiability. That's why it uses historical perspective, because you can verify how much is your property. 2 million. Give me the evidence that that is 2 million. Well, what is the evidence? You have the what? The receipt. You have the receipt. Okay, or the contract. No? So everybody can verify because there is evidence. Okay? While managerial accounting emphasizes the relevance for planning and control, and even looking for the future potential. Okay? Precision. So almost the same. Financial accounting managerial, but there are some details that they sometimes contradict, like verifiability versus relevance. Now we are talking of number 4, precision versus timeliness. Okay, we already know what is that precision. Okay? For financial accounting, it emphasizes precision, recording, because another external person that may use our financial accounting report is BIR. You have to be precise because any intentional or unintentional misleading tax payments is actually criminal offense in our country. While in managerial accounting, it emphasizes timeliness rather than precision. So more on what? More on the necessary on time. The boss needs the report tomorrow, but you cannot do it in financial accounting because You have to wait for what? For the end of the month. Okay? But you can estimate because the emphasis of managerial accounting is timeliness. You can estimate because the boss, the managers, needs to decide on something. Okay, something important for the company. Okay? So, timeliness. The next aspect is subject. Financial accounting focus is on the whole organization, while managerial accounting focuses on segments of an organization. It depends because you will need reports that would only describe one division or one department. Unlike in financial accounting, you are going to what? To report, to record on all of the company, okay, totally, and summarize it for the whole company. Okay, but since the managers will use the managerial accounting reports, there are managers for each division or each department, and each department manager would only focus on his own department and his own division rather than the whole organization. So actually there are several managers for each and every department, so that is really the purpose. They divide very complicated whole operation into several segments, several departments. Okay. And number 6 aspect is the GAAP, or what we mean by GAAP, generally accepted accounting principles. So financial accounting must follow GAAP and those formats, those prescribed formats by GAAP. However, managerial accounting need not follow GAAP or any prescribed format because it is just fun for the consumption of managers for decision-making purposes, not for what? Precision reporting. Okay? And the last aspect is requirement. Financial accounting, mandatory report, external report. Just like if your company is publicly listed, you have to submit a yearly report, okay, to SEC, to Securities and Exchange Commission. But managerial accounting is not mandatory. However, it's not mandatory, but those managers need it. So, mandatory in the sense that you are legally responsible, but the demand of the managers to do it on time at certain deadline is also too demanding for the staff to what? They are pressured to submit reports at several details because there are several managers. One report is not important to one manager, but the other report is important to the other one. So, specific reports. Okay. So, these are the aspects that we can clearly see that managerial accounting is different from financial accounting. But the concept, the terminologies, usually we can use in both accounting branches. So with that, let's end our module 1. And again, this is Dr. EYPEI, preaching engineering for nation building.